Hi, to another review by Epta Insights. That's going to be a quick one, probably less than 10 minutes as usual. So we're reviewing GBPUSD, a trade taken on the 7th of December, which was a Thursday, which was basically yesterday, uh, based on the day that I'm making this recording. So without wasting any time, let's dive into it. Well, first thing first, before you can go into any analysis, you want to look at what? If you're trading Forex, you want to look at what DXY or the dollar index is doing, right? So as you can see, the dollar index is trading away from was trading, okay, just still, it's trading away from this weekly CB and bound to target what? This external range low, which is hovering what? Sell side liquidity. So if you look at the progress, this was the initial progress, and this is the most recent one. It's basically rejecting what? This premium array, and there's the next discount array. So if DXY is bearish, then other forex pairs are bound to be what? To be bullish, the likes of EURUSD, GBPUSD, and all the likes, right? So you can see how we was anticipating this 4-hour CB to hold price right here. We see a change in the state of delivery once we close below this up close candle, and right there you can see what happened. We rejected that CB and we are confirming what? Bearish order flow. So with this, we are confident with what? Taking longs on GBPUSD or EURUSD because they are strongly correlated, right? Closely correlated markets. And you can see right now there's anticipation going into the rest of the week and next week. The market maker sell model. We have the buy side of the curve, reversal at what? CB, weekly CB. Now bound to attack this low, that low, and everything that has been labeled here. So on GBPUSD, we had what? Price trading through this monthly CB. So if it trades through it and closes above it, then it becomes an inversion. It can be used as an inversion level, right? So we have what? An inversion fair value gap on the monthly, or the BC consequent encroachment on the weekly, because there's the weekly BC, and the middle of that is what? Consequent encroachment, right? So right here we can see these lines are overlapping, or these levels are overlapping. So it's basically what? Giving us a strong confidence, and we are most likely to do what? To attack that buy side liquidity pool right there. Imbalance to liquidity. You understand? So on the hourly, we was having this on Thursday. So we saw price trading into what? Trading into this uh 1 hour BC, and also we had to be aware of this hourly BC too. And we had an inversion fair value gap on the 4 hour, which didn't really make much difference. So right here you can see, as I was trying to delineate, this is from a live recording, right? As I was trading, I get to live record my sessions. So there's from a live recording to say I'm looking at what? That's fair value gap. Potentially, as the news release is released, it might just trade into this fair value gap, or just slightly into this fair value gap below this low, doing what? Pairing what is, they're dialing it. They would want to dial it at a discount and then trade higher to attack what? Buy side liquidity here, and if possible, buy side liquidity resting up there, which is a previous daily high. This is Wednesday's high. So you can see what happened on the news. It's a little bit sketchy, but you bear with me. That's from, like I said, that's from a video. Screen is from a video. So you can see what the news do. Here I am trying to delineate that fair value gap that I was referring to. There's one. The news trade into this fair value gap and trade higher, attacking what? Bound to attack the liquidity pool right here. Imbalance, liquidity. So eventually we get that reaction of this 1 hour BC, and then we attack that liquidity pool, and then there's a deep retracement that eventually traded higher. But it was none of my business because I did what? I was content with this whole expansion move. This is all that I was looking for the day. Once we rejected that high, I wasn't willing to take it all the way to that high. And you can see how the bodies are closing within this 1 hour BC, right? We have our change in the state of delivery once we close above this 4 consecutive down close candles right there, changing the state of delivery. We are confirming bullish order flow, come back into this and into this fair value gap and rally higher. So on the 5 minutes, here's the confusing part, right? uh, ideally you'd want to enter on this fair value gap or that fair value gap and put your stop on the swing low. But listen to this part. Because we had that 1 hour fair value gap right there, it takes precedence over the smaller time frame fair value gaps to say you have to make an allowance for price to trade all the way to that 1 hour BC. And you can see that it basically did on the news release at 8:30. Unemployment claims slammed through to that 1 hour BC. If you had put your stop here, you'd have been taken out, right? You would have been taken out right there and there. Even though order flow is respecting this order block, about to get a reaction of this fair value gap, or maybe you are using this inversion level, or you are trying to use the breaker here, whatever that you would have been wanting to use, you could have been taken out if you had put your stop loss into it. So there's just a stop hunt, so you don't have to worry about it. Because if you look at, I'll elaborate this on EURUSD. If you look at EURUSD, it doesn't take out this swing low here because it had no 1 hour fair value gap beneath it. So you have to understand that context. It's not all written in black and white. You understand? So here's the thing, right? You can see my executions. I had put buy limits into this, the other one on the order block, and two of them right there in that fair value gap. Let me go back to it. This fair value gap and the other one on this order block right there. And what did I do? I didn't put any stop loss because um as I was saying, right, here are my executions on GU. So you can see that I didn't put any stop loss here. Why? Like I've already said, right? The reason was because I wasn't sure, right? Honestly, I wasn't sure on which pair between GU and EU was gonna make a stop rate, right? So I wasn't willing to risk it by putting what? By putting a stop loss prior or above this 1 hour fair value. You can see how price ran into the 1 hour fair value gap right here, the BC, right? We had this BC and the lower BC. So I wasn't about to place my stop right here. So I accommodated the risk forward price to trade all the way to that BC and then started trading higher. And the moment we pushed higher, right, past this um down close candle, I moved my stop to slightly above break even, and then I took off the first position where I took off the first position above this swing high right here. It's a premium, it's a swing high at the premium level of our range, right? This is our range here from this low to that high. So I took it off right there, you can see. And then the next one I took it off just above this right here. You can see my TP, and then I was holding for this TP. But the moment we started retracing, right, the moment I saw a slight retracement, I was struggle to get above that high. What did I do? I took off my position completely right there, right there and there, and you can see it, right? You can see how I took off the last position right there, and I was done for the day. And here's what I was trying to say with EU. EU had the same anticipation. Our price was respecting this 1 hour fair value gap. You can see we only have one fair value gap on EURUSD, right? We don't have a lower fair value gap like on GU, so there wasn't no need for a stop rate on EU. So you can see this low never taken out. I was anticipating what price would drop into this fair value gap. We see that happening at the news release, and eventually we do what? We are bound to attack what? This high right here. So we had buy side resting above this high and above the previous daily high, which was Wednesday's high, which it eventually took out when I wasn't watching. You understand? So we took out that high right there and kept on trading higher, came back for a deep retracement, but we were done, right? Our market maker buy model was complete that way. So I was done and out of the trade by then. I wasn't trading EU, by the way, to be specific, but you can see how EU was quick to get to its buy side liquidity pool, and this happened within the scope of what? 10 minutes. There's 5 minutes, 5 minutes, and that was that. Done and dusted, right? So with that being said, thanks for listening. See you on another